Hello and welcome to the Friday wrap up brought to you by David Gockstein. I am your host, Landy, and today is July 31st, 2026. It is the last day of the month, and I'm just going to check to make sure that I am getting the actual feed through here on audio because a few things have changed behind the scenes for me here. So give me just a moment to check on that. We're going to look at Bitcoin. We're going to look at oil. We're going to look at traditional markets. Not too much out of the ordinary over there. Hopefully, I won't get feedback on the stream here. Let's see. There we go. All right. So audio seems to be working well. Look, these are at a different time. So I expect a lot of replays. I did have some people come in and have some requests last week that I took a look at. But what I'm going to request from you, if you are here watching, is liking and sharing this out there, letting people know that we are live here on a Friday evening 8 p.m. Eastern, 5 p.m. Pacific Standard Time. And of course, we just got the daily close in for Bitcoin. And we've essentially kind of stuck to the range here that I've been talking about as a very important range of interest or area of interest for Bitcoin between 62 and a half and $65,000, especially on closes. So, Bitcoin has been going sideways. We are in a compression phase right now for daily price action. We are starting to see that compression follow through to some higher term timeframes relative to the daily as well. And, you know, we need to see a concrete breakout and close either below 62 and a half and above 65, and especially above 65 and a half, as we have now seen a rejection there around the upper first standard deviation. So let's jump right into it. Um, this compression did threaten to resolve to the downside, but bounced pretty much perfectly off the lower second standard deviation and closed inside of the 62 and a half area. So if we do see any further breakdown from there, you can see the lower third standard deviation is coming in right around the swing lows. So again, if we do even see lower term time frames start to drop 62 and a half, 61 to 61 and a half are kind of the name of the game at this point. And just to kind of show that visually here, you can see that this cuts right across that lower third standard deviation. Now, if we do see a close below the 62 350 area, and of course also losing 62 and a half. If those conditions are met, that would be below yesterday's low, slightly below it, initiating expansion into a price replace band, at least for the daily. So something to watch over the weekend. This will shift by the time we do talk again on Monday, but this is where the potential for running this area isn't just the potential, it is actionable. And then, of course, that would open up the lows and, of course, lower that I'm going to show here in just a moment. And back above 65 to 65.5, the upper first standard deviation, that's when we start getting back into the 67 to $68,000 area. And then, of course, 70 to 72. Now, what I want to do here is pull up the support and resistance zones of interest. We've had these on the chart for a very long time. This is not new for any regular viewers of my content. Even if you are just looking at some of the charts that I post after I do analysis in video format, and then I usually follow up with a little bit of a post and a little bit of encouragement for folks to actually get the context by watching the video or the live stream to actually understand what these areas are and what they mean for price action here. So below the lower second standard deviation, closes below there would initiate expansion on the daily. It doesn't necessarily mean that it's a foregone conclusion that we are going to see the expansion head straight down. When you're looking at bands this compressed together, things can bounce around. But if we do see close over close price momentum that loses that lower third standard deviation, we've either already tested or are very likely going to test essentially 58 to 60, where we have a big monthly zone of interest from the prior cycle highs around 58. This is actually local structure. So we do have some highs from the prior cycle that intersect with some of the higher low structure on the weeklies that are from not just the prior cycle bull and bear turn, but also the most recent cycles move up in the bull market. So essentially 58.8 to 60,000, 60,200 or so, down to $58,000. Remember, I was looking for when we were headed down, when we were back in the 80s, I talked about 58 to 60, 58 to 60, 58 to 60. Well, we saw 60, we saw 58, and then we saw a sweep of 58 at 57,750. That would be the next area of interest if the 61, 2 to 3 area were lost. I would give it some room, 61K. If we start seeing that area lost, we're very likely looking at this area getting run again, 58 to 60. If we do see that dropped on expansion, the next big areas that I'd be looking is the mid 50s, 54 to 56 on the top side of the weeklies, and then 52 and a half to 54 essentially on the bottom side of the weeklies. Anywhere there for price action, then begins to open up some pretty important areas of interest, which is the prior bear market's lower high at 48 to around $50,000. That would be your run up coming into the spot ETF launches. Now, to the upside, if we do see any kind of closes back above $65,000, even in lower term timeframes, I'd be looking at that high getting run, 65.4 to 65.56 area, even up to 65.7 on its way to go and test the highs, essentially anywhere from this high at 67 up here to 68,000 would be fair game. And you can even take this as a daily swing area up to the prior cycle high at 69. And then that's going to really start to open up this area overhead between 70,000, 70,500 at the bottom side of a weekly swing area of interest to 72 to 72.2 on the top side of that area. So, it's really about resolution of this compression with an expansion phase. And that's what I would be, just watching for very carefully over this weekend into next week, which of course will be the first week of August. So, we're right in that time period where many would expect, that August to September correction in equities markets. And we've already started to see some of it play out towards the end of July. So it's really about watching kind of how equities hold up if they do continue to head down. What is the relative strength in the crypto space? Obviously, with Bitcoin leading the way. Do we see it remain relatively strong versus equities if they continue down? Do we get a nice bounce in equities? And then let's watch what kind of strength and or weakness comes back to the cryptocurrency space, being very far out on the risk curve. Big thing here on the weekly is to watch this for the potential of becoming another lower high. Let's go ahead and get rid of the support and resistance zones of interest for a moment here and talk a little bit about this. Right, we had the uptrending structure was broken. We moved from higher high on the weekly to lower low. And I consider this, even though there is swing structure here, lower low, lower high, lower low, essentially equal high. If this does paint a high, it's going to do it below 63,680. That would paint this as a weekly lower high. Anywhere below the lower first standard deviation starts putting us into, well, the mid 50s, that 54 to 56 by the lower second standard deviation. This will update over the weekend, and especially going to be relevant if we are playing within the volatility zone between the lower first and lower second standard deviation. Of course, that would put Bitcoin below 62.5 on a daily close. So definitely something to watch coming into the weekend, but realize that 63.8 is going to be what actually paints a lower high on the weekly. So that would become the new criteria for a trend break on the weekly if it does paint and close that way. Now, I get this question a lot, and I think I think that it's something that I guess is worth addressing again for maybe folks that don't know. But the close is 0 UTC. So it's going to be 8 p.m. Eastern, 5 p.m. Pacific Standard Time on Sunday is when you're going to see the weekly close come in, just like the daily closes, obviously. So if this does paint a lower high, this would be the trend break criteria as a high in a major zone of interest. And in this case, you're looking at, actually, I lied, the 63. Where was I getting 63? Yeah, this is going to be $67,000 essentially as the lower high. I don't know where I was getting 63. Was I getting it from that lower first standard deviation? 62.8. My bad. I misread that. So the lower high would be that failure at 67. So again, closes below 62.5 is going to paint it. And I'm sorry, 63.8 is the criteria for the close to actually set the closing lower high. There we go. I straightened out my thoughts. So essentially, what we're looking for is, does this close and lock in this lower high this week, next week, whatever, right? And if it does so on closes this weekend below 63,680 and that lower first standard deviation, especially below 62.5 region, that's going to open up the lows as a potential, but then that also gives us criteria for a trend break. And that would be $67,000 on closes. So definitely something to pay attention to. Um, if Bitcoin holds the lows, could it, come down and even sweep them, go into the mid 50s, pop back up, and then try to take out this lower height? That would be something to pay attention to in terms of potential scenarios. Um, that's where you could be looking for something like this to get, a higher low or equal low. This is just an example, but in a higher low scenario, that would be your trend reversal setup to trend break. But higher low equal low would be the name of the game. You can also see where we could potentially get, lower lows. And then this would be the trend break. And then we'd hunt the trend reversal setup after a trend breaking close, which would look something like, that essentially. Um, not something that I'm saying is going to happen, but those are the kind of the scenarios that I'd be looking for coming into this weekly close and potentially developing over the course of August into September. We are in the thick of it. We are in the bear market. This is, not a bottom set. I keep saying this, and then I had somebody jump into one of my comments, and underneath one of my posts, like, "Oh, you're saying that the bottom's in." Never said that. I've never said that. I've said that what the criteria is in order for us to be looking for a macro low to form, and what that criteria would be, and what would need to be met on closes for us to call either this area or lower a macro low in. This is a move still in progress from a monthly time frame perspective. You can see that even on the downside, if we got continuation down as we are now entering an expansive phase on the monthly to the downside, we're looking 48 to 50 essentially by that lower second standard deviation. And this is going to be important. We're going to see this close here in a little bit, and this is going to tick down, and likely it's going to be in that 48 to 50 region. It's sitting at essentially $51,000 right now. And it's something definitely to pay attention to, is I do think that, it's not necessarily true that it has to close through. It can walk it down. It can walk the bands down the lower second to hit some of the targets without even closing through, expand that volatility. And then it's all about, where does the trend break on the monthly time frame, which of course at right now is 82,800. That's what would cause a trend break. And right now this is lower lows on a close and a swing. So this is a move still in progress on the monthly. This is a bear market, but we are getting into that time period where we're coming into August, and before you know it, it's going to be September, and then it's Q4, right? And that's, Q4, we're looking at either the bottom forming, potentially bottom in. But if bottom is forming, maybe it's confirmed to be in Q1 of next year. But that's like the base case to be looking for in terms of time horizon. And also doesn't mean that that's going to happen, but that is kind of the base case based on the cyclical price that we have had as examples here in Bitcoin. And I know that everybody's like, the 4-year cycle doesn't exist yet. It topped exactly when it was supposed to on the 4-year cycle for price action, and nothing meaningfully changed in terms of the actual outlook from even the mining perspective. And also, there was at one point, I had somebody famously say to me that miners don't matter, but now coming into the August mandatory signaling period for this new BIP 110. Now miners matter. They're all about, now hash rate's going to come online. All the support's going to, now miners matter. Well, you probably should have paid attention when I was calling 123 to 125 at the highs as a very high probability for a local high that could potentially turn into a macro top. But I'd wait to call it. Many of you remember that. One of the main reasons why is when we were at the highs, we were in minor capitulation. Miners were offloading, and as soon as all it took was price action head to the downside more aggressively when a big seller stepped into the market, and then miners started firing off to the tune of 210,000 Bitcoin in October when the high did after the high did come in. So, you know, that's just added pressure. You should know where that pressure is coming from. In a lot of cases, it's not just institutions, but institutions have provided a very nice buffer with these long consolidations on the way up, and even these the sharper move down, and then a nice longer consolidation on that meaner version. Um, did provide miners a lot of room. There's only been one real big capitulation, and then it's been kind of like business as usual. We're sitting just below one zettahash right now for the network, and We might get some difficulty adjustments down if we see price head back down, but that remains to be seen. Um, Look, I think my thoughts are pretty well fleshed out in video format, for what I'm looking for. Um, Re-explaining it is something that I will do quite often, especially as we see price action develop. But because we haven't seen much movement in this area since we saw the lower low come in, there's not much to really talk about. Also, beware. I know all the head and shoulders enjoyers are talking about the head and shoulders measured move back to the lows. Beware that if we don't break below on closes, um, and we slingshot off the bottom side of the bands or something like that, even right here, beware of a throwback to the head, which would be $68,000, and then that would open up the 70 to 72 area and potentially more. So they've in head and shoulders patterns have a 50% throwback rate, and that means it throws back to the head, and potentially even gets continuation higher. So just be aware of that. Let's go take a look at oil. Um, Oil, did a lot of what we expected. It's just sitting on the zones on these on the closes and the opens here, that we have marked out. So we had that perfect mean reversion, right? We got compression, expansion, mean reversion, right? And after a major gap fill down here, 68 to 70, um, we were looking for this high time frame support. We were looking for a bounce here. The big areas that I was talking about, 76, 77 to around, $80. And then eventually, if we hit 88 to 90, look for 90 to 95 as a zone. And then we came right back down to the next zone after rejecting out of that area. And that's, essentially 76 to $77 on the bottom side to around 79 to 80 on the top side of this zone. Closed right on it after tapping the basis. Nice move up. This is a higher low, equal low structure right here. Now it's about, do we see this continue to move up? And then I would eye 90 to 95 at the extremes near the highs as potential overhead resistance. Um, and realistically, the closest area of resistance, not just that upper first standard deviation, it's going to move up on Monday. I'd be looking, 88 to essentially 90 at the bottom side of that area. And if it breaks through, beware of that upper second standard deviation, even if it swings for higher highs. When you get unless it actually starts closing above the upper second at $95 a barrel, that's the only way I'm looking for 98 to 100 by the upper third, potentially more. Otherwise, this would be set up for an expansion, to mean reversion to retest of the highs and then back down for either a consolidation for the next major move. But obviously, there is other factors at play in the oil market. So if we do see any kind of infrastructure or supply side stuff hit in Saudi Arabia, UAE, or anything meaningfully disrupted in the Red Sea or the Gulf of Oman, then understand that that would be affecting supply, right? Right now, there is the reason that oil has been, it's inelastic right now. So it's going to be incredibly susceptible to any kind of disruptions in that manner. But the strait matters less and less right now. And the entire world and supply chain for oil has rerouted around that at this point. Um, and you can check the shipping manifest and see that there is even still ships that were in the strait that have hit port outside of the strait. So we know that while the blockade is going on, while there's strikes going on, while there's harassment campaigns going on from one side to the other, that ships are still moving through. Um, so I would just pay attention to the price action, the zones of interest. If we did see, you know, if we did see like a lower high, whether it's here or we see a push up to like 88 to 90 or even a nice swing into the zone, into the low 90s, just the criteria is going to be this low gets taken out in this zone, $78 a barrel, essentially 77, 78. So $78 a barrel gets taken out. And more importantly, we see it drop out the bottom side of the zone here at that, 74 to 76 area. That's where the lows come back into play. Um, and something, it is something to keep watching. Um, the other thing that I've said, this is going to be very interesting. is watching how oil did head up, but we've got a nice move down in Dixie. And now with that nice move down, below $100, we saw risk come back to the traditional markets after, some more aggressive moves down, we'll say. We did get that move to 730. Um, and then a bounce right back up. And realistically, you could say that it's, as long as it's back above the basis band, it's more consolidation. And again, criteria does not change for SPY. Back above 750, 752, you can look for the local highs here. So 753 to that 756. We need to see closes above there. And then 760 for continuation to 765. You want to see close over close price momentum and expansion above there. Otherwise, this does risk further consolidation with these mini corrections in between, and then a potential keel over into a much larger correction later. So, anywhere below 720 to 722, we're looking at that low getting ran right around 715. Anywhere below there, we're well on our way for an expansive move for a retest of 695, 700, which is the high side structure over here. Pretty easy to understand what's happening there. NASDAQ, it did head down towards the 27K level. And I believe, did it hit it? And hit it almost direct. Yeah, 27,176. So 176 points above. Look, this is expansion, but it's walking the bands down. We got mean reversion. So now it's about trend. Where does the trend change? The trend right now on the daily is going to change above the same criteria that we had on Wednesday, where I marked out this high. Still going to be the same. Beware of any kind of back fills of these gaps up here in and around the basis and up to around 29K. You need to see 29 to essentially closed above to break this downtrend. Doesn't mean that it's not just a deviation of the downtrend, but at least then the criteria becomes this isn't just a move in progress. We can watch that low. If we get any higher, lower, equal low price action, we could start to see a trend shift. Right now, big move down, big correction down. Could this get worse? Could it start pulling SPY down? That is something to watch if we do see strength come back to Dixie. Obviously, that's Dixie headed down. The USD JPY got bought back pretty aggressively. So the yen coming off of like a big move down got bought back aggressively. So the trade out of the dollar was pretty aggressive. Now, if we do see 26.9, 26.850 dropped, we could look for the lower third to govern around where this is going to update. It's at 26,650 now, but it could end up at 26.5. But realistically, if we're starting to push that, I'd be looking for maybe a little bit more juice down to the 26 to 26.2 level to test those highs. Again, need to hunt a trend break. That's going to be the criteria looking back to, kind of the Monday criteria or the Wednesday criteria, Monday and Wednesday, I guess, criteria that I kind of laid out, which is 29.2 is what you need to see closes above. That would at least be a structure break, a change of character. We need to see then higher low, equal low structure. Otherwise, it's a deviation. We continue down. What is interesting is we are seeing how SPY has been holding up a little bit better. And more importantly, we saw the criteria of a trend break and then equal lows come in on Dow because we're looking at an internal market rotation, right? Big sell off in semis and AI and rotating into a bit more of a diversification kind of a look when it comes to value and dividend paying stocks. So Dow holding up well, and maybe Dow's giving it away. I've talked about this prior before we had the larger correction last time over here, that Dow was going to give it away on any kind of closes below the, essentially 48.5 level. And that's what we were waiting for. Everything else was already kind of there, but we were looking for that larger correction once it broke down. I'd be looking for maybe a larger correction right now below the lower third standard deviation. And that's going to be the 51.3 to 51K on swings. So if we do see essentially this area dropped, that'd be expansion at least to 50,500. Then you can start picking out between the highs and the lows over here at 50K, and then potentially, moving more aggressively down towards 48 and then the mid to low 48s, which, honestly would be a reclaim of the prior highs. Whereas, NASDAQ and SPY have room. So, just some food for thought there. Back towards the upside and the upper bands, you need to see breakouts and closes above 53K, back towards that high to start initiating expansion above 53 and a half. Yes, that would be new highs, but you need to see close over close price expansion and momentum above there to actually get the next resolution of this compression at the highs to the upside. Otherwise, it does favor the downside. Expansion at the moment still. Now I'm going to look at IWM because I suspect that we met the criteria, but we did not hit the expansion that I talked about when Milo was in the chat and asked about it. So we've now swung this area, and we did not actually meet the expansion criteria. That's going to now be essentially expansion criteria is going to be below. You're looking at below around 288. What was I saying? 288 to 290. Need to see close over close. Yeah, it's essentially moved down. You could even call it 286 to 288 now. I would give it some room. Maybe get past this gap fill down here. 286. Yeah, 286 61. You can just give it some room. 286 to 288 as the bottom side zone that needs to hold for IWM. Expansion in earnest on closes below there to the 270 275 area initially, and then we can start looking lower towards the upper 260s, down to the 258 to 260 levels. But again, watch the major indexes, and I would keep a close eye on rotation within the market. So that's essentially the bulk of my analysis for this stuff. There's not a lot of things like this is what the summers are about. We're just methodically hitting targets that we've been looking for in some of the consolidations, and it's all about the next resolution, either in correction to the downside to identify some really good opportunity at extremes, or some of the areas of interest, especially for like Bitcoin and cryptocurrency, some of the areas of interest to the upside for a trade. Obviously, the further that it goes up, unless we see some sort of character change or structure change on higher term timeframes, it's going to favor the shorts, until we see that structure develop and start to change. And at this particular moment, it is not. So, why Dash Pay to the moon when? Milo, you've been pumping it. I think the gentleman, Dash Pay gentleman, was on David's show today. Change one letter in minors in this combo. Sounds very different. Bits. What the hell? What the hell? Gee, Naka. I can't tell if you're trolling me or not. GFS now and Monday. Yeah, let's roll into what the chat's kind of looking at. Let's pull up a few. We're gonna make them fresh charts. Now, if you're looking at Dash Pay, should I just go market cap? I might just want to go market cap with this, with Dash. Oh, jeez. Let's go to the higher term time frame. That's a chart that it's in a downtrend, and it's been in a downtrend for a long time. Could it have found its, macro low already? Man, I mean, nice moves for the trend break, but it couldn't close it. Got nowhere even close to closing it. That's rough, and this is essentially equal highs up here. So Yeah, I don't like that. That wick could could really govern things even if this does start to turn around. Now locally on the monthly, you do have a local potential because of the close with this high here, but it's such a clusterfuck of just swings all over the place. 736, 763 million in market cap. Honestly, I would just pay the she's that's a rough drawdown. Yeah, 275 mil needs to hold. Otherwise, lows are back in play. If it does head down, it is sitting below the basis on the monthly. Don't like that. Don't like that at all, to be quite honest. This thing's been riding the floor for momentum on the monthly for a long time. It can still get some bullish divergence, even though it wouldn't, even off of higher lows from here. Weekly needs to hold here. Needs to hold here. Or this risks falling not just to 340s. This risks falling to around 310, 312 to tap on the top side. And I would give it room. I'd give room all the way to the lower third, 287. In terms of market cap, I don't care what the price of the coin is. But yeah, I would be looking down here if this does drop these lows right in here. So you're looking at specifically this low that has literally been run this week. So that's rough. It's an ugly chart. Is there potential here? Sure, maybe. It's ugly. Get it off my screen. All right. Knock out BMNR. I think that Bits is trolling me at this point. GFS now. Let's look at GFS. I think I talked about GFS this week, didn't I? Yeah. I did talk about GFS because this move, obviously off the back of the news, the 1% stake, didn't really do much. Didn't even actually get the pop that one might have expected. I would just really be watching these lows here. There is like a little swing structure down here between the higher low and then the swing structure in here. But essentially, this is ugly. $40 a share and under to 36 would be essentially your next big area. And I would even push that down to the 35. So just for areas of interest to the downside as it relates to the bands. There's a wide area down here, but I would be looking 40 if it starts to dig in under, looking mid 30s. Could potentially be the 38 to 40 area on the downside. I would have liked to have seen it hold on to that lower first standard deviation, but it is right at the highs here for this zone of interest for support. And it did try to bottom out there. So in some lower term time frames after swinging through, this is where things will get interesting. Earnings are coming in on the 5th, so might be worth watching as it heads into earnings, because this could present some opportunity off of this zone. Otherwise, I would be really, really eyeing down towards the low 40s. You're looking like 40 to 41.50. So can it swing outside of it? Sure. But the main area for me would be 40, right around $40 to 41.5. And then potential back up to, $65 would not be out of the question. But definitely coming into earnings, should be interesting to watch it on this very, very aggressive move down that still has juice left for momentum. It's in and around. I suspect it tapped on the bearish control zone at 43.25. 46.39. So it didn't quite tap on the bearish control zone, but definitely would go in for a tap on the weekly. Daily's probably looking like it just wants to bounce more aggressively from here. Be careful of $60 failures in and around the basis, and that lower high. So that's really what I'd be paying attention to for Global Foundries. Now it's right at a prior support area, top side of the structure, but you don't want to see it fall through, or else we're looking mid to low 40s. Um, um, hmm, hmm. Everybody wants now. Everybody's always looking at now. Service now. All right. What you're hoping for is a bottoming structure. And if this is a bottoming structure, it's ugly as sin. But it's got room. It's got room. It could actually come down and be safe. It can swing the low safely, as long as it's not closing below the close here, initiating expansion, or it could bounce off of an expansive move at 83. Nice expansion to compression, and realistically, you can see swings up to 126.70 or so. The swing high, you need to see closes above there. And then here's the criteria for re-expansion back to the upside. Weekly time frame, by the way. You would need to see closes above there that can get continuation on closes above 139, 140. So this is, and you can expand this down to the actual closing structure there. 120, you can call it 125 to 140 if you want, just to be easy. Refine it on your own chart, right? But this needs to escape this zone in order to get that upside expansion, if it's going to carve out a low here. So you do have higher highs, higher lows, lower high, lower low swing, and then see if it can come up and do this, one of these. It has not closed above that last little lower high here. So you'd need to see it close. Trend reversal set up to trend break again, and then escape past this higher high structure over here and the zone on a week over week close, right? Then you can start, you're looking at essentially a retest of this low over here, at the 135 zone, right? You've got this low over here, which is essentially your 125, 127 swings. You've got the consolidation over here as well that it's battling against. So a lot of overhead, higher time frame, overhead resistances. So get above that. It's got a legit shot to go to like 168, 170, and then potentially hit the top side at 190 and go for the 200s again. That's what you'd want to see. Below here, look in price replace band down to $70, and then eventually, that would be really looking at the low structure over here, and this high side structure over here, so around $70, through to this low. And if that drops, we're looking significantly lower on expansions down to 60, and that opens the door for 50s and upper 40s. So just very close attention to this compression and which way it starts to resolve. And you want to see close over close price momentum post expansion. You don't want to see reversals off of an expansion. Yes, I know. I know he looks like a James Bond villain. Yeah, I've seen. Um, so Monday, it has been a little while. Earnings coming up. Obviously, we've had a bunch of earnings. We're going to see earnings come up again. This is going to be more towards uh, the latter half of the weekly there. So we're looking not next week, but the week after. Again, big expansion down, compression. Very easy to identify the areas of interest here locally. right? You got the gap fill to the top side. Needs to get outside the top side of this area here, 97.30. I would even, yeah, if it does start and it filled the gap, but if it can start to get above there, we're looking essentially 110 to like 125 on the initial expansion targets if it gets a close over close expansion. And then it's really about like how does this trend hold up? So you had your lower low, you got your higher your you had a low here. This was a closing low, so you did have a trend break to higher low structure, but then you had essentially swing structure begin to change here. So you do want to see essentially what we were talking about with service now, right? You want to see this zone overhead start to get reclaimed on dailies and then close over close price momentum on the weekly. We're essentially looking right where it rejected. Um, you're looking 90 to I would even say 98. You want to see closes on the weekly. Swings can land wherever. You want to see closes for price expansion. And then you really don't want to see, 67 and a half dropped. Lower first has got to hold. And this is not drawn correctly. So it's one of those. Those are not equal lows. That's what you want to see. It can it save itself at like 58? Sure. But then if it starts pushing below there, that's your line in the sand. That's full on expansion on any kind of close over close price action below around 57.50. And there you go. Pretty easy. Easy peasy. Momentum's looking up. It bounced off the bearish control zone, headed neutral, so it's not really telling us much on relative strength. Daily's trying to push into, this is actually something to pay attention to. Regular Stoke, if it pushes into overbought, it's going to end up back in this zone overhead, and then it's about closes from there, and then retests back down and seeing if things can hold up, right? You had a trend breaking move to trend breaking move. So again, just reflecting that higher term time frame consolidation after a large expansion down. So I'm actually curious to hear your thoughts, Milo. I am curious. Bits, do you actually want me to look at Naka and BMNR? Because I will. I can look at them if you really want my opinion on them. What the hell is why do I recognize this ticker but feel like it's okay, Grayscale? Yeah. OTC. Why are you having me look up shitters? Like absolute garbage. I can't tell if he's trolling or not. He could be being serious. I picked up around $60 and then again 70. It's been a printer. Yeah. Nice. I'm good. Like you and Ryan do really, really well. And on these plays. And again, it's about, identifying the opportunity. Doesn't matter what the ticker symbol is. But knowing a little bit about the sector does help as well. And when earnings are coming up and stuff like that. So, it really, I think, is going to come down to wider risk environment. We were talking about on stage on the Wolf Bitcoin stage. We're talking about USD JPY, and maybe it was like a week ago, and I was like, "Yeah, this thing's gonna have to nuke." And we got the nuke. Daily tried to get that buyback. It's taken the dollar with it. We got the lower term time frame back, bumps back up, and what that was doing was shedding strength in the US dollar as we saw kind of a rotation to bonds for a little bit. And that's commodities. And then subsequently a sell-off coming in late. So I just watch where the liquidity is going, and then we've had really heavy rotation within equities markets. So I think that that's actually good. The big thing is right now lending is still really loose, and I don't see any stress there in terms of like tightening up lending requirements. So yeah, we'll see how the market digests this past FOMC meeting heading into the next one, and how the banking sector kind of reacts as well. Something I'll talk a little bit more about as we start heading towards the end of August and in towards September. So I think it's going to be pertinent at that particular time. But yeah, Bitcoin in a really tight compression coming into the Saturday the Saturday session open. That little move down um, just before the new session opened on the daily, and then right back to the top of this compression. Maybe we'll see something interesting over the weekend. I'm curious if we'll see, because there's been a lot going on overseas, and the market has enjoyed the volatility over the weekends on the crypto side of things. So, but usually it's been like ticker season. It's not necessarily Bitcoin. Maybe we'll see that starting to reflect in some of the majors. All right, Bits. I appreciate your trolling. I do. Um, just reading through the chat here. So yeah, Milo. Look, Milo, you and Ryan and Nat are killers when it comes to TradFi. And I know that others that often frequent like the Wolf stage, the Wolf Bitcoin stage. Obviously, Wolf Financial is all primarily TradFi guys, right? They do great. But then I know some of you guys that are in crypto are also really just killers on the TradFi side, just finding value all over the place. I love it. I love it. Great conversation. I'd love to talk more about it, but I'm literally wearing a Bitcoin puppet PFP, so everybody expects me just to be crypto only. So I just lean into that. I start talking about stocks, and people are like, "Man, what's the ticker, man? I just want another runner. Bitcoin puppet hates everything. He's Bitcoin only." Like all these different funny narratives. Um, like this weird narrative that I've somehow said that the macro low is in when I never have said that. Um, and it's weird because it's been more than one, and I could tell that they're like botted accounts. They don't watch the videos, they don't enter the spaces. So it's like they're just like reply guy farming all over the place. But it's weird, like even if your AI is using this model that's going to reply guy, at least be relevant to the conversation, right? But they just suck. I don't know. Like maybe they're just a few generations behind on the models they're using to do their posting or something. Because their posting sucks. At least keep it topical. Um, oh well, thank you, Dave. I appreciate you, Dave. Dave reposted and said some nice things about me. Um, look, I got a lot of love for Dave. Um, he is an elite space host. We'll do some donut glazing because we glazed Cade the other day, and congratulations to Cade on just being an awesome dude. But there's some glazed donuts being handed out to Cade and Bits. But Dave deserves some too, right? He's a good guy, consistent, and he's actually one of the reasons why I'm even on Spaces. So, big shout out to Dave. Much love. Um, and he is the elite space host. um, and obviously Nat's an absolute killer. Love Nat, love Cool, love the whole crew. And I mean, a lot of you already know. I mean, you're here because you've seen me on either David's show, and big shout out to David. Obviously, this is brought to you by David Gockstein. But between ATC and Wolf Bitcoin. Like, it's one of the reasons why a lot of you even know who the hell I am. So, and I appreciate that. Obviously, helps, being on stage with David Gokhshtein and on his show as well. Um, but I really do appreciate everybody that I get to interact with and talk to, and that has helped me grow on X here. So I really shout out to all of you. It is the weekend. So I am going to start wrapping this up because I'm going to go and eat some dinner, I guess, and chill with I'm going to go meet up with the family. Think they're going to be here. Yeah. Oh shit, they are going to be here. Nice. So I'm going to go meet up with the fam and have some dinner. Um and then enjoy the weekend. And I hope that all of you enjoy your weekend. Um Trade safe, stay safe, all of that good stuff. But I hope you have a great weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world. Like I just said, trade safe, but more importantly than anything else, stay safe because I would like to see you again on Monday. Now you can find me on Monday. Very highly likely, I will be on the breakdown for my segment with David Gokhshtein. He's got a lot of great guests that have been coming on recently. By the way, if you have not watched the interview that he did with Cade, please go do so. Um, I think it's awesome. You get to learn a little bit more about Cade, a little bit about the business side of things, a little bit of a discussion about spaces and stuff like that. But what a great interview. It was awesome to see Cade on there. And then there's been a lot of other really great interviews that David has had this past week with a lot of guests coming on, right? This is what happens when you're building in the bear. Now people are, starting to feel like, all right, we're wrapping up and getting towards the end of, the first stages of these products and MVPs and or already established products that are being built back out and further built out and further fleshed out. And now it's like, hey, we're getting ready. We're starting to load up for, for the eventual bottoming in the markets and then turn around into a bull trend. So, I think it's exciting. Then, of course, you can find me on the Wolf Bitcoin Spaces. I always repost the schedule that Cade puts out with all the speakers on it. So look forward to that over the weekend sometime. That usually goes up. And then, of course, you can find me on ATC with Dave, Cool, and Nat. And it's really good to have Cool back. We've been having a hell of a lot of fun over there. So obviously, different format, not necessarily totally market focused, like the Wolf spaces that I'm typically on with the Wolf Bitcoin crew. But man, it's we have a lot of fun, and especially lately, it's been a lot of fun with a lot of the Wolf crew that's coming through ATC. So I really do hope to see you. 12 p.m. Pacific Standard or 12 p.m. Eastern Standard Time. The breakdown, likely around the 11 11 a.m. I believe is when a lot of the spaces for Wolf Bitcoin start up, that run pretty much straight through the day. Bits has got all of his live streams that he's doing, and man, is he killing it, man. I freaking love watching Bits. He breaks down price action in a really easy to understand way. He's got a really well defined and refined system. So obviously you all know that you know who the hell he is. And then, of course, at 5:30 p.m. Eastern Standard Time, you'll have ATC Monday through Thursday, of which I should be hosting Thursday as well again. So I look forward to talking to you all next week. Have a great weekend. Please be safe. And if you have some drinks, have some extra for me. Take care. Landy out.